And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick here with Alix Steel, taking you to the closing bell. A global simulcast starting right now. Scarlet Fu in the TV studio. Tim Stenovec in the radio booth. Emily Graffeo by his side in place of Carol Masser as we welcome our audiences across all of our Bloomberg platforms, including our partnership with YouTube. As stocks right now, Tim Stenovec, retesting those session lows. The S&P down 1.7% on the day.
Yeah, set for the worst week, going all the way back to March of 2023 when we saw that regional banking crisis. I mean, in the S&P 500, Broadcom, Tesla, Supermicro, just dragging down the S&P 500.
And tech doing even worse here. The NASDAQ 100 down 2.7%. There was really nowhere to hide. That safe haven trade in tech stocks is just not working today.
You know what's performing a little bit better in that it's not down as much? The Dow Industrials on a day in which volume is a very healthy 19% above the 20-day average.
Yeah, and also if I just look at small caps for a second, like they're definitely down, but just by 1.8%. So definitely performing better, say, than tech.
Yeah, and we were just talking with John Kolovis about some of those technical levels, the retesting of some of those key moving averages, where the next line of support is here. And you wonder, is this going to be a move, meaning heading into next week, that is going to be technical driven, fundamental driven, or macro driven?
I think the answer to that's yes. I think you have to put all three of those together, right? You get the CPI, which is going to be macro. We're obviously going to be looking at the debate. And then in terms of the micro, I don't know what we have, right? Earnings are going to be in a stall point, so that's going to be a little difficult to get a better read.
Yeah, the stocks right now down about 4.5%. Your two-year yield down about 8 basis points here, and your VIX elevated here on the day right around 22. Let's walk you through the numbers here in New York as we get the closing bells with the Dow Jones Industrial Average closing out the day down by 1 percentage point, roughly about 400 points. And believe it or not, that's actually our outperformer on the day. On a weekly basis, it's down about 2%. The S&P 500, though, having an awful day, 1.7% lower than when it started the day, more than 3% lower than where it started the week. The NASDAQ Composite down about 2.5% on the day, 4.7% on the week. And let's take a look at that Russell 2000, which is going to close lower by about 1.9%.
In the S&P 500, you had more than four out of every 5 stocks lower on the day today. 418 moved lower, only 82 ended up moving higher, Scarlett.
All right, let's take a look at IMAP. It should be a pretty easy read today. There's lots and lots of red. There are little slivers of green there. And why don't I tell you the biggest decliners first, right? You've got certainly the tech sector, whether it's technology, whether it's communication services, whether it's consumer discretionary, all of those are down at least 2%. Now, the ones that are kind of outperforming by just a hair, consumer durables and apparel ever so slightly, real estate investment trusts, a little bit of green, but this is a pretty broad retreat, everyone.
All right, well, it did manage to find some gainers today. It was not easy. I do want to start with U.S. Steel, ticker X, up more than 4% today. This after Cleveland-Cliffs CEO said that he's absolutely in the market for his rivals' assets. He told CNBC that he's working with investment banks J.P. Morgan, Chase, and Wells Fargo on a plan. He made these comments yesterday after the market was closed. Shares of U.S. Steel moving higher today. U.S. Steel, Cleveland-Cliffs, and J.P. Morgan didn't immediately respond to a request for comment from Bloomberg. Wells Fargo declined to comment. Remember, it was just Wednesday of this week when President Joe Biden said that he was said to be preparing to block the Nippon Steel deal. Also, how about a little bowling, everyone?
Okay.
B-O-W-L. Bolero, they got more than 350 locations in the U.S., Canada, and Mexico. The company reported revenue for the fourth quarter that came in above the average analyst estimates. Shares higher today by more than 6%. And this is a really interesting one on a day when speculative corners of the market are not doing so well. GameStop actually rose today. Shares higher. This after the man known as Roaring Kitty posted to X for the first time in a few months. Shares higher by close to 7% today. What happened? Shares up more than 30% so far this year. The company is going to report earnings after the bell on Tuesday.
That'll definitely be an interesting one to watch if they have many earnings to report, Tim.
If they have any earnings to report.
I was going to say, what
I
earnings?
should say they're reporting results after the bell.
Right, their losses. I'm looking at the decliners. No surprise that those semi stocks getting hit really on the week, but also today, Broadcom down about 10% after the chipmaker gave a revenue forecast that was seen as disappointing, extending losses after their earnings miss that came after the bell yesterday. They see revenue at about $14 billion versus estimates of $14.13 billion. I think really underscoring just how high the bar is for these chip names after the rally we've seen all year. In Broadcom today, trading volume was quadruple the average for around this time of day. I'm also looking at Super Microcomputer. Those shares down as much as 7.6%. JP Morgan downgraded the server company to neutral from overweight. And of course, the move comes in the wake of a delayed 10K filing for the company. The company said it needed more time to assess its internal controls. And then finally, I'm looking at Elf Beauty. Couldn't really find what was driving the stock lower, at least today, but earlier this week, we got some Nielsen-tracked channel point of sales data for the makeup company, and analysts called out weaker than ideal 4-week acceleration, and they called out a deceleration in the 2-year growth performance. That stock down 18% on the week and down about 10% today with the broader market falling.
This is really all flying in face of my invest in your face thing when these companies report and they are struggling or there's some negative press around them. Okay, let's get to the bond market here. There was buying pretty much across the curve, a tiny bit of selling, and I mean tiny, in the back end. But the front end, look, down by 8 basis points. You're taking a look at the 210 curve, closing on inverting for the first time since July 1st, 2022. You're looking at about a 5 basis point difference. Might not seem like a big deal, guys, but the speed with which we re-rated in the last couple of days feels very tremendous.
Yeah, and that was a great point that I think John Kolovis made as well here about kind of the speed of the descent here. And there are going to be a lot of superlatives on this day, of course, that we're crunching those numbers now. But it gets to this idea here that what is there to save this market? Earnings season is over. The Fed is going, thankfully, into a quiet period. And now you basically just have the markets left to their own devices.
Okay, well, let's talk a little bit more about these markets. Look at the SOX this week, having its worst day going all the way back, or worst week rather, going all the way back to March of 2020. Certainly NVIDIA and Broadcom, a big part of that. But if you look at the SOX today, guys, every single component of the 30 stocks that are in the SOX down today, down another 4.5% today. What's the message that that investors are sending with selling semiconductors?
Are you going to buy one of these Apple iPhones? I hear they have this big announcement coming up next week. And, it's supposed to be AI enabled, though not quite AI enabled.
I'm not get more thumbs up things to do your FaceTime.
I don't think you need a new iPhone for that.
I don't?
No.
I heard the iPhone 17 will be a bigger deal than the iPhone 16. So if you're going to hold off.
We're already on the iPhone 17
Yeah.
super cycle announcement?
So is that next year then?
Yeah, that's not even 2020.
Have we talked about this, though? I mean, you guys are raising a really good point, which is the idea that the upgrade cycle has gotten a lot longer for people.
Yeah.
And this makes up 50%, roughly half of Apple's revenue. And it's a really important, it's a crucial device for the company. But if they don't offer something that, prompts people to upgrade, then people are going to wait for longer to upgrade.
And it's also part of the Broadcom supply chain. As we were talking about earlier, Tim, Broadcom is a big supplier for chips for Apple.
I feel like you just need to invest in the you break it, I fix it, like whatever Apple repair company is a better bet than the Apple refresh.
Won't you get sued for that or something? Don't Apple come after you?
No, but if now, everyone's past their manufacturer warranty anyway, so because we're all holding on to them for years and years. There's a great story today written by Elena Pang about how the way that we're eating is totally changing. Americans' love of cheese has drawn $4 billion into new factories. We keep talking about this manufacturing recession, not when it comes to building factories.
Whoa. What the heck is that?
That's cheese, everyone.
Okay.
That's what we eat?
I thought cheese grew on trees.
Who likes the cheese? I love the cheese. Romaine does not like the cheese.
No, I don't.
Scarlet?
Particularly after seeing that video. I never want to know how the sausage is made or the cheese.
Tim?
We have a great cheese shop close to where we live.
Yeah, well, we're part slopey people, so
Fancy
that's it.
man.
Emily, are you a
Cheese
cheese
shops.
person?
I haven't met a cheese that I don't have an appetite to try. I would pretty much try any
Wow.
cheese.
I'm wondering
that
how
looks
much
good.
4 of the 5 of
That's
us are
delicious.
responsible for the $4 billion in new factories
Wonderful.
that dairy processors are planning across the U.S. to meet
$4
the
billion
surging demand.
worth of this stuff gets sold. Is that what you're telling me?
Oh,
$4 billion to put into new factories to feed us the cheese that
And they just
apparently
pump it out
So-
the
through
three of you are
a
really
little hose
into.
there.
I don't know.
So-
Do they clean that hose after every pump?
Yes, they clean the hose.
no
Are you
cheese.
sure?
Very
Are
sanitary.
you sure,
No cheese
Alex?
whiz. No cheese
Also,
whiz for Romaine.
we like the mold. The mold is good.
Right,
What?
it's aged.
Yeah.
I'm so not into cheese.
Oh, gosh, Alex.
All right, I'm told we have to go. Happy Friday, everyone. Eat some cheese.
Which part was the mold? Was it the white part or the?
That is going to do it for our cross-platform coverage of the market close on Bloomberg TV, radio, YouTube, and Bloomberg Originals.